Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now, let's look at scalping trading. What is scalping trading? Now, scalping is a trading style that specializes in profiting off small price changes, generally after a trade is executed and becomes profitable. It requires the trader to have a strict exit strategy because one large loss could eliminate the many small gains the trader worked to obtain. Having the right tools such as a live feed, a direct access broker, and the stamina to place many trades is required for this strategy to be successful. Now, how does the strategy work? So, scalping is based on an assumption that most stocks will complete the first stage of a movement, but where it goes from there is uncertain. After that initial stage, some stocks cease to advance while others continue. Scalping achieves results by increasing the number of winners and sacrificing the size of the wins. A successful scalper, however, will have a much higher ratio of winning trades versus losing ones while keeping profits roughly equal or slightly bigger than losses. So, what is the premises of the scalping trading? First is the lessened exposure limits risk. A brief exposure to the market diminishes the probability of running into an adverse event. So, second is smaller moves are easier to obtain. A bigger imbalance of supply and demand is needed to warrant bigger price changes. For example, it is easier for a stock to make a 10-cent move than it is to make a $1 move. So the smaller moves are more frequent than larger ones. Even during relatively quiet markets, there are many small movements a scalper can exploit. So let's look at the spreads in scalping versus normal trading strategy. When scalpers trade, they want to profit off the changes in the security's bid-ask spread. That's the difference between the price a broker will buy a security from a trader, the bid, and the price that the broker will sell it for. So, therefore, they're looking for a wider spread. But in normal circumstances, trading is fairly consistent and can allow for steady profits. That's because the spread between the bid and the ask is also steady as supply and demand for the securities is balanced. So there are three types of scalping trading. The first type of scalping is referred to as market making, whereby a scalper tries to capitalize on the spread by simultaneously posting a bid and an offer for a specific stock. The second type of scalping is done by purchasing a large number of shares that are sold for a gain on a very small price movement. A trader of this style will enter into positions for several thousand shares and wait for a small move, which is usually measured in cents. The third type of scalping is considered to be closer to the traditional methods of trading. A trader enters an amount of shares on any setup or signal from his or her system and closes the position as soon as the first exit signal is generated near the 1:1 risk or reward ratio. So, for let's look at some tips for first time scalpers or like new scalpers. First is order execution. A novice needs to master the art of efficient order execution. A delayed or bad order can wipe out what little profit was earned and even result in a loss. Next tip is frequency and costs. A novice scalper has to make sure to keep costs in mind while making the trades. Third is trading. Spotting the trend and momentum comes in handy for a scalper who can even enter and exit briefly to repeat a pattern. Next is trading sides. Beginners are usually more comfortable with trading on the buy side and should stick to it before they gain sufficient confidence and expertise to handle the short side. Technical analysis. Novices should equip themselves with the basics of technical analysis to combat increasing competition in the intraday world. Next, let's look at volume. As a technique, scalping requires frequent entry and exit decisions within a short time frame. High volume trades offer much needed liquidity. Then the last one is discipline. As a rule, it is best to close all positions during a day's trading session and not carry them over to the next day. That's all for the scalping trading strategy. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free.